Good morning. This is Larry McMillan with a stock market update on Monday, October 30th. So last week was another negative week for the market, made a new relative low. The bearish pattern of lower highs and lower lows is still intact, and the overall picture is really very negative at this time still. We're experiencing some oversold conditions, though, which might generate buy signals. And so let's go over those. The number one thing actually is a seasonal buy signal, which kicks in really as of Friday's close. So this week is a seasonally bullish week. Seasonal trades are based on the calendar. But this one has some basis in reality as well, in that mutual funds year ends are often at the end of October. And if they've been selling during October, which obviously there's been some pretty heavy selling this October, they tend to buy back some of those funds, some of those stocks at the end of the month. Meanwhile, the S&P chart is in a steep downtrend, but if we were to have an oversold rally, we could rally up towards the 4,300 level again, although that's a stretch of some sort because that's well above the declining 20-day moving average on S&P, and typically an oversold rally will, die out just after it crosses above the declining 20-day moving average. Meanwhile, equity only and other put call ratios are kind of presenting a mixed picture right now. We've still got the sell signal from the weighted ratio, which is the number one thing that we look at. But now there has been a buy signal from the total put call ratio. That's usually worth 100 points on the S&P, which would fit in line with the short-term rally we're talking about here, maybe the October seasonal pattern as well, worth 100 points or so. That wouldn't really change the downtrend on S&P, but it would provide, a relief rally. 100 points is certainly tradable. The breadth of the market has been disastrous, and so it is so oversold on that regard that the breadth oscillators can't even get back to buy signals unless we have about 3, certainly 2, maybe 3 days of positive breadth. Meanwhile, new highs and new lows are completely dominated by new lows. There's 300 or 400 every day on the New York Stock Exchange, which just indicates how bad this market really is, because if you look back 52 weeks, that's the bottom, supposed bottom a year ago, and these stocks are now all making new lows below that bottom. So that's certainly a big negative that you don't see by looking at just the chart of the S&P alone. And in fact, the Russell 2000, which is a small cap index, made a new low on Friday. That's the lowest it's traded at since the summer of 2020. So it's a new low for the 2022 bear market, let's call it. The levels of VIX are presenting two different pictures here. So the first is that there was a spike peak buy signal in VIX, and that's, again, a short-term positive thing, could last a month. But the more negative, longer-term picture is that the trend of VIX has shifted to a sell signal. And by that, I mean that VIX and its 20-day moving average are above the 200-day. So the VIX is trending higher. That's not good for stocks. The last thing we look at is the construct of volatility derivatives. That's clinging to a bullish scenario, or let's just say a non-bearish scenario at this time. So overall, we're still holding our core bearish position, but we are trading these other indicators around that, and there are some buy signals in there, including as I said, the October seasonal trade, which is taking place this week and lasts through Thursday's close. Meanwhile, I invite you to visit our website, take a look at the daily newsletters we have there, so you can keep up to date on all of these indicators in a more timely manner. And meanwhile, have a great week trading.